Welcome to Quant Minds. I'm joined today by Matthew Rooney from Selby Jennings. Matthew, how are you doing today?
Very well, thank you. How are you?
I'm doing really well. So I wanted to start off with an overview of how algorithmic trading and systematic trading changed in the last few years. Can you tell me about all that?
Sure. I think it's been a really interesting time for systematic algo trading. I think the diversification of a number of funds, investment banks, asset managers has probably been at the forefront of everything we've been looking at. I think historically fundamental discretionary players have moved towards a more systematic approach. Looking to diversify, looking for steady returns. Naturally, in a pretty volatile market, that's pretty important. I think what's been super interesting is, as I say, the bigger discretionary players are actually putting a lot of investment and time into systematizing their platforms. I think we're also seeing a lot more smaller players actually come to the field here and really investing, which is also super interesting. The advancements in data and infrastructure have really allowed these guys to actually enter a field that's typically been quite hard to get into. So it's been quite a volatile time, but certainly a very interesting one.
Absolutely. So aside from the volatility of the market, so new technologies are coming in and out of this space all the time. So artificial intelligence, machine learning, reinforcement learning. How widespread are these techniques?
I think pretty widespread. I think there was a study by the Bank of England not too long ago. Naturally, they didn't catch everyone in their survey, but I think it was 72% of firms that they spoken to were actually developing or actually using machine learning applications right now, which is pretty widespread. I think that's not even including the hedge fund prop shops, that kind of world, who are looking to seek any kind of competitive advantage they can. And I think those small marginal gains are where AI and machine learning really come in. I think what will be a super interesting area, though, is what will happen as a result of the regulation and governance of this particular issue, especially with things like ChatGPT and all that kind of stuff. So a really interesting area to watch and see what happens there.
So what are the biggest challenges when it comes to adaptation, and what talent does it take for machine learning to
Yeah, that's a good question. I think one of the main challenges is where the actual machine learning and statistics comes from. So there's a lot of advancements in biology, drug discovery, financial fields. It's how that's actually applied and the real world examples that really make it the challenge here. A lot of it is still very theoretical, and it's how we turn that into practice. And I think that's really going to be the main issue here. But there's some amazing things coming out of academia, out of research, we'll track this forward.
Absolutely. And can you tell me about the actual skill sets that quants need to develop in this space in order to take advantage of these technologies?
Sure. I think mostly a decent understanding of data and statistics. Not a new thing to a quant, but that's really the underpinning here, as well as a good knowledge of machine learning techniques. I think we're talking about deep learning a lot. We're talking about regression. We're talking about tree-based models. All of these kind of things are really the focus point, as well as a decent understanding of obviously Python, R, all of these coding languages that make the implementation actually possible.
Wonderful. And finally, what are you most looking forward to learn about at Quant Minds International?
I think, generally speaking, there are two things. The volatility modelling piece is always super interesting. I think Julian's actually taking a point on some of the workshops there this year. And I think anything by Dr. John Hull, I'm always interested in. So I'll definitely be stopping by.
Wonderful. Thank you so much for joining me today.
Cheers, thank you.